27th July 2023, we're looking at trading the ICT Silver Bullet setup in the London session. So that's 7 a.m. GMT onwards. So there's two components to this. One is the actual price action when the time window opens. The other is the analysis on the higher time frame to see, number one, what liquidity has most recently been taken, and number two, where the next likely draw on liquidity is. So what you're looking at on the screen is the CAD aggregate, and you'll see, so this red line on the right of the screen is where price action is just about to start. Okay, so that's the 7 a.m. about to start. This high here happened during Asia this morning, the same day. Okay, and you'll see it took out the previous high at the beginning of Asia, so that's towards the Japanese Open, and also it's taken out, well, it had already taken, this high had already taken out this session, these two. This is yesterday's New York high. So we've got session liquidity has been taken. Price has come up into the middle of yesterday's New York opening range. Okay, it's rejected off there, and we'll see if we're looking for shorts. There's some very clear draws on liquidity. One is here, and the other is down here. Okay, so that's the higher time frame analysis. In reality, you can do it two ways. You can do that prior to the London Open, or you can just wait for the London Open to occur, and then once you find decent price action, you go back and look to see if the liquidity narrative conforms with what you want to happen. So let me just, I'll remove this for a sec. So this is the 7 a.m. okay, so from the 7 a.m. immediately we get a push down, a little bit of a retracement, so you can start drawing your fibs from here if you want. In this case, we never got a move back above the halfway mark to be in a premium. Price continues going down, and then we get two consecutive up candles. Okay, so from this point onwards, it looks like we could get a potential setup. So the condition for a setup, number one, we got the energetic move down. So an energetic move in any direction with fair value gap. So you can see a fair value gap has been left here, and it's now at a premium. Okay, so if price comes back into this premium, which it does here, right, it reacts off this fair value gap. So this was liquidity here, fair value gap here at a premium, and immediately gets rejected. Okay, so this is, the time is 7:20. So from the 7:20 close, you can start looking for sells on CADs. Why? Because number one, you've seen the setup on the price action at the correct time, and number two, we've just seen a liquidity take in Asia on the upside, which means we need a target on the downside, which is going to be the Asian lows, at least the Asian lows. Okay, so that's 7:20. Next thing you do, you go to all your CAD pairs. Okay, and you can't just get in to any trade immediately. You need to start seeing the same thing or better on one of the crosses. So this is the CAD Swiss 720. 720 puts us here. Okay, so where's the setup? So you could either take that, hang on, you could either wait, because you're looking at that on a 5 minute and you think that's the break. I'll take the break of the Asian range, which is a perfectly good trade. But on a 1 minute, see, can you get exactly the same setup? What do I mean by that? The silver bullet. So the silver bullet needs to have an energetic move down, okay, move up into a fair value gap. So it's not super clear. Maybe if I zoom in, it'll be a bit nicer. So 720, it's pretty much exactly the same setup as you saw on the CAD aggregate. So we had the move down. This is the fair value gap, which is now at premium. Price comes into that premium, rejects, comes down. You could have got in from here with your stop above there. Okay, that's a 6 pip stop. We'll call it a 10 pip stop. Okay, so 10 pip stop. somewhere around here. Yeah, you could have got a 2-to-1 like that. Okay, had you waited for the Asian range, still a good trade, but you'd have got a 1-to-1. Okay, so that's CAD Swiss. Let's see what's happening on. So this is the New Zealand CAD. Okay, so this could be interesting. New Zealand CAD, what we're looking at on a 1 minute, we definitely have an energetic move up from the 7. Okay, so once this forms here, I can fib that up and I'll just do it from there. Okay, so price has to come down into a discount. So the discount is anything below the 50. 50 is going to be where this white line is. And so what you get is price comes down. This is a fair value gap. It does reject. You get 1 bar up, but then it comes down again. This is why it might be a good idea if you wait for 2 consecutive up bars on the 1 minute. That happens here. Okay, so your entry isn't as good. But if you wait for 2 consecutive up bars and then enter, it looks like you could have got a 1-to-1, but there was no continuation and it came back and took you out. Okay, dollar CAD, similar kind of thing. We don't get the so we're trying to buy dollar CAD. So what happens here is at the open we're not getting the price action we want. We want to be, if we're going to be buying dollar CAD to sell the CAD, we don't have it. We actually have the opposite. So within the silver bullet time zone, we've got an energetic move down. This is your fair value gap. That's the rejection here, followed by 2 red candles. You could actually sell this. Okay, but you'd want to look at what's happening on the dollar first before you took that sell. But had you taken it, let's say from here, stop there, call it 10 pip stop, you at least get 1-to-1, okay, before it turns around. CAD yen, so we're looking to sell CAD yen, which means we would want to see this moving down immediately. So we do actually get this, look. Okay, so this one doesn't work out because the setup is good. You get immediate move down. So we start from here, immediate move down. We do kind of get a reaction off the 50 point, but let's just fib it up from, like, fib it up from here. Yeah, you'd want to sell from there. You got 2 red candles in a row come into a fair value gap. It doesn't work. See, so when you get the setup in the aggregate, it doesn't mean all of them are going to work, but there's usually at least 1 or 2 that do work. So for example, this one worked very well. This is the Euro CAD. Okay, so we've just seen the setup at 720 on our CAD. So what we want to see is an energetic move up. So actually this is the 720 here. And it's hard to trade, okay, because, well, let's do it, stick to the book. We haven't really, the problem is we haven't had an energetic move up yet on the Euro CAD. Okay, so if we were just trading based on this, we wouldn't get the entry. But technically what's happened is that has taken liquidity, come into a very deep discount, and it starts going at 720. So you could take the break of that. Either take the break of that or wait for the break of the 5 minute. Okay, with your stop down here, 16, 15 pip, it's gone 1-to-1 at least. So that's the basic idea. You wait for the 7 o'clock hour, you look at the price action, then you see is price action supported by narrative? Narrative means 2 things. Has liquidity, where has liquidity most recently been taken? Is there a clear draw on liquidity in the direction you want to take the trade? And you get the setup. So in this case, we're looking for a short. We get price coming into a premium fair value gap, immediately rejecting. Then you can start looking for trades.